Welcome to bankless monthly markets. Uh, Hopefully, at the beginning of each month, starting in season 6, or I guess the last week of season 5 as the beta test, going into season 6, beginning of every month, we'll do some technical analysis on the bank token as it relates to Ethereum. Um, and Hopefully, this is a great illustration of how TradingView is used to look at the math behind the price action of the bank token. And of course, by price action, what we mean is a token's price moving towards highs and lows, constantly seeking the best market price for participants. Of course, we know it's never exactly at the best price, and so it um, moves in one direction, corrects in another direction, corrects that direction, and is a constant kind of tug and war. And of course, we recognize that mostly it's trading bots and algorithms that move, and market makers that move the price action of tokens. Um, so, hopefully, the rain in the background's not coming through too bad. But here is the bank token price action. Um, Against Ether on a 3-week time frame using TradingView's data on Uniswap. We can see that Monday, the 19th of April in 2021 was the first 3-week candle, and we can go back to the daily to actually figure out what day that first candle was. Here we have it as being May 4th. That first weekly. So, one thing that we usually, when tokens first launch, um, you know, really any token or asset, you need at minimum 3 to 10 years worth of history to even like start being able to call it reliable data. Seeing as how we don't have that luxury with the bank token, and a lot of altcoins, we'll just go with the time frames and the patterns that we have. But so essentially, we exclude the first couple data points when we're looking at highs and lows. Of course, we know the bank token launched, its price went down, seeking a low, and it seemed to find one. And then after finding a low, it seeks to find a high. It found that higher high. So now we have a data point because we have a high when it started. We have a higher low, and then we have a higher high. And so you actually don't have a higher high or higher low until you pass the previous higher high. So we have a low, a high, higher high, and we are looking for a low. You can see as you move from like the 3-week to the weekly time frames, you start to see that we are in a downward trend. We are making lower lows and we are making lower highs, and we're currently looking for a lower low right now. And one thing that we can take note of is that on the 3-week time scale, there's not even enough time to put standard moving averages onto our chart. It's not until we get to the weekly time frame that we even have more than 50 weeks of data, because we are just over a year old. So you can see here in the beginning of May, after our 1 year anniversary, we were finally able to have 50 weeks worth of data. And so you can see that this moving average is moving down. And ultimately, it's not until we get above the 50-week moving average till we can, expect the bank token to start looking to test these previous higher high. Go back to the 3-week view. Turn the moving averages off for now. You can see we have our first pivot point to go off of. And we want to start breaking, this picture down a little bit. One of the first things that we noticed is that we did create a major support on the, in April the 19th when this candle closed. We've come down, tested that support once, twice, and we've, most recently in these bear markets, confirming again that downtrend, we broke that support, major support level. Again, it's not until we get above it till we can really start talking about trend reversals on any kind of meaningful medium-term time frame, really, or long-term. You can see here that we did in December put in with everybody else in the market our essentially what we could say is like an all-time high. It is the big major resistance overhead until we break that high. Until we break it, come down, test it, and pass whatever high we set in there. Till that happens, we're not on the macro uptrend. That being said, there is lots of price action between where we're at now and 12 cents. So that's what we're going to be looking at, and this is especially where price is going to be, in my opinion, what I'm preparing for the next couple of years, from a very conservative point of view. What this high and low did here was begin to create a range. We broke that range, obviously, but essentially we created a range. We create ranges between highs and lows. When we look at these ranges and these highs and lows, this is what we call price action. There are many different types of paths and patterns. As an Elliott waiver, I'll just mention that what we look for are wave patterns of three waves, three waves, and three waves, or for a trend cycle, or a 5-3-5 or 3-3-5 in any particular time frame or cycle that we're looking at. It's kind of patterns that I look at. We can see a very easily identified path is, just looking at the trend support that was created off these first two touches here in June and to August, where we came through, broke that support, tested it, shot above it, came back down to it. Ultimately, with the turnaround of the overall market, began coming down as soon as that support was broke. Again, an Elliott wave pattern, we call this a three-wave pattern, and an ABC is a common three-wave pattern. So this is one pattern. We can expect a new pattern to develop after this high. So that's what we're going to look at. This is the pattern that we are currently in. We call this the midterm, pattern. Um, and I'm not going to go deeply into Elliott wave, but just to show you that there are reasons why this pattern exists. It fits these criteria for this pattern. Um, there, people do not always agree on patterns. You can have multiple patterns, but fundamentally, this is like a three-way move, right? It's one move in the market. It was the uptrend. We're starting a new pattern. We've identified a change of trend. We've identified some patterns that we can go by and talk about. We can also measure what's going on. This is called a fib retracement. And what we do is we take from the low here to the high here, we measure that distance and break it up into percentages. Um, and so what this says is that from this low to this high, if we're to come down to this line, that is a 23% move. Right? At this point, it's 23% on sale, um, essentially. We can see that, this is another key point here. This is the 0.386. This just means that this is 38% of the move from the low to the high. And again, this is on a logarithmic scale because we're working with so many candles. And you can think of this as, it shows us 50% of a move. So you can think of this as banks on sale, 50%. We have two very common numbers, the 50% and the 0.618 or 61% range. Generally, this is considered one of the best deals, sales. People tend to buy things when they're 50 to 6 over 50% on sale. And in altcoins in particular, and we call this the golden pocket for that reason. Algorithms, bots use it to create very simple trading strategies. And I've noticed with the bank token in particular and altcoins that the 0.88 is also a very good price area to find value. So we see a lot of price action around the golden pocket. We see a lot of price action here around the 0.88. However, it's not enough. Still more people selling than buying. And fundamentally, we've moved more than 100% from our all-time high and our, original all-time low. Something the key points that are noteworthy, again, this kind of golden pocket. You can see this range of where price action tends to get the most activity. And in between these ranges, the price action just goes and moves from one support resistance to the next. Here's just another kind of visual way to show this. Call these golden pockets. As long, shorting from these, ranges would have been very good opportunities. Likewise, when we're in uptrends, these are great areas to find value to accumulate. We can see, ultimately, real heavy support right around here. People like buying or getting the token at this price. Fundamentally, since we didn't set in a higher low, uh, the people aren't buying more than they're selling, and so price goes down. Trends down until it otherwise doesn't. We can also identify again, we just throw on that original pattern, that first three wave, and we can see more waves kind of beginning to oscillate on its way down. Um, the pattern has started. We are looking for an end, right, or a reversal. So what might that look like? Again, we have that main support that broke right there. This means we have a change of the pattern. We can, on a smaller scale, look to see how that happened. And we had support broken, tested, rejected, and you can see once it rejected from that green line, we continued down until we didn't. We call that a test fail, and then the confirmation of that fail as this support across these candles broke as well. And you can see the wick up where this was tested and tested again. And on this third candle, still looking for people, still, these are people selling into here, selling into the bots and algorithms and retail folk. So we have the new trend. Let's check it out. And I love pitchforks for this reason. The pitchfork, the way it works, you have a swing high, swing low, and you have another swing high. So lower high is the way that the pitchfork works. Um, boom, boom, boom. And so by pulling that high to this low, matching up to here, I'm able to identify some really interesting lines here. And we're actually going to drop down to the weekly to get a little better view. And essentially, we can look at the settings real quick here. The green area is, we have this median red line out here. So the green area represents 50% of this move. The blue area, so 50% to the green line, another 50% to the blue line, and another 50% to the purple line. There are different types of pitchforks that you can do. The modified shift is, to my understand, a pitchfork that you use during corrections. And it's also interesting to line this up with the regular shift fork. The regular shift just kind of shows us in a range trending down. We've actually gone below the median line, tested above it, rejecting currently on a weekly basis from that median line again. And we would like to see a reversal and cross of this median line and a move upwards, out, ultimately out of this pattern, right? we start looking at the Elliott count, just roughly, we can see that we have another, three-wave move here. This is one pattern. We have a three-wave move here. So 333 or 335 will be what we ultimately want to look at as we move down here. There's another pattern I don't really need to get into, but it's essentially a wedge, and a wedging pattern, could be something, essentially like that, right? We have a, kind of just keeps going till it breaks one way or the other. But so we have a 3. We're looking for another 3 or 5 or a wedge. And again, the modified shift, it shows, what does it show? It looks at this and says, well, see, we were in this middle zone and we came up out of it. This is, as long as we stay in this channel, it's like sideways. Even though we broke support, and this support is now resistance, even though it broke, we're still in this channel. And we've been testing the liquidity up into the next channel. And again, what we would like to see is a move up and out at some point out of this channel. And this is how, what that might look like. Of course, the farther we go down, the more we'll have to travel up. We could stay in this channel for quite a while. We could bounce around, you know, um, on this channel quite a bit before finally taking off. I'm getting into next year now. But you can see how anything sideways and up out of this range is actually really good relative to Ethereum, right? We can actually, the bank token can, relative to Ethereum, can move sideways and down. And as Ethereum gains value relative to fiat, the bank also gains value relative to fiat. A little bit of a digression there, but that's the modified shift fork, and this is what I'm generally watching, to look at, what pattern develops that deviates from this kind of channel of ranges. So let's break this down. Break this down. Can hide those. Let's check out what's called a fib extension. Again, now we are on the weekly time scale. And what this does, similar to the fib retracement, the fib retracement measures percentages related to 2 points. The fib retracement measures percentages relative to 3 points, or the relationship of 2 lines to each other, and then related to the percentage we're related to as a third line or point. And what we can see here is that as a percentage of those two moves, there was some price action around the 236, but ultimately rejected. And we are, one thing that you always keep on the radar is what's called a one-to-one move. So what it means is that from point A to B, or point C to D, will be 100% the length of point A to B. And that's sitting right down here. You can see that we were in this golden pocket range here between the 0.5 and 0.618. Found a little bit of excitement. But again, keep an eye out for that 0.888. And ultimately, we don't want to see the one-to-one move broke. However, if it does, we have some targets or percentages that frame out potential uh, more downside depending on, you know, I really feel every crypto would have to be going down like this. There would have to align with the stock market. I don't expect things to go down that low. However, I never expected things to go down as low as they have already. However, these are the key lines that help us give us some kind of horizons to look for in the future. And one of the questions I always ask, and it was the premise of this video, is are computers more involved than humans in creating this price action? Way we look at that is we by looking at the golden pocket, and we can see that from if we found the golden pocket for this move here, we can see right here is where the algorithms started selling, and because it failed at the next 618, probably right around there, the algorithms didn't start buying it back up. And so the price continues to go down until the price hits another value area, and then algorithms start buying it back up. So we have the larger, right? We're looking for these numbers on the more medium term, and we can now measure this internal from low, this internal swing from this high to this low, just like we did from the high back here to this low to this high. And it gives us some interesting targets. Mostly this is all within the one-to-one move. So if we're just looking at that one-to-one move and trying to break it down so that we know, if this, when these numbers break, the one-to-one has broken, and essentially we can see here again the 0.88. We saw some activity. This was the point, the golden pocket up here where this price action was. We can see that this one-to-one move internally is getting tested, currently getting rejected. However, those still have a 1 day and 4 hours left to trading. some folks um, will look at candles and essentially this is an indecision candle. People don't know whether to buy or whether to sell. And so we got wicks on both sides. Might not see much change in price. We'll have to wait for a couple more weeks, but this is essentially getting tested and failed. And so we're looking for these levels, which are more corrective and line up with the levels of the more macro fib, being the 0.88 um, to its one-to-one move. So these are numbers that we're looking at. We see that rejection. I think this is a value area. Nobody wants to see the prices go this low. However, these are the levels where algorithms and trading bots will start taking risk on altcoins. So if we see an inflow of money into the crypto market anytime during this time, um, we can expect to see the larger cryptos move first. Altcoins probably continue to dip a little further as people sell their altcoins to get back into Bitcoin and Ethereum. And then once they've made a profit, a little bit of profit, and are convinced of at least a near-term reversal, then traders, bots will begin moving profits back into altcoins and get us out of this value area. In my opinion, this is not financial advice, but just a way to use math boxes and colors to look at to do a technical analysis on the token, on the bank token. Um, this is a 30 to 50% drop in the bank value relative to Ethereum. However, towards the end of this video, I can show you how this may easily coincide with a 10 to 20% increase in the value of Ethereum itself before reversing. So what might a reversal look like? The most common, uh, just real simple reversal pattern that even new folks to the market will understand is kind of this M shape um, kind of move. It's called a head and shoulders, but essentially we come down. My hope is this first level of support, we pop up, but we don't create really any new highs relative to this rejection, 24th of October. We come down, people go crap, they sell, and then it gets bought back up at the next one of the next value area lows. Of course, the higher this is, the better. And then we fail to again create maybe much of a new high, um, come back down. Hopefully, our right shoulder is higher than our left shoulder, but it just can't break the head. So it could quite easily come back to test this level of support here. And, you know, once we confirm that we've moved past this, what's called the neckline, um, then we'll begin asking the question, confirming then whether this is a reversal. And of course, as we come out of here, we'll want to see these key levels get tested as it breaks out. We'll show this image again later, but this would take us, till about February or March before we can actually kind of confirm or expect to be able to confirm our suspicions that the bottom may be in on the near or medium term. I always like an opportunity to show people the Ichimoku cloud. It's very good visual representation. Um, you can forget about the squiggly lines here, and we can drop down to the 3-day chart. But essentially, this red cloud here is resistance. On the way up, it creates green clouds when there's enough data. On the way down, it creates red clouds. And you want to get the price above the green clouds. um, and the Ichimoku cloud is one of the few indicators that actually projects into the future. You can notice that's why this projects, the cloud forward, is that it's saying, and we can expect to continue down through January. And even moving slightly up and sideways will continue to create the red cloud until we actually get a trend reversal, and start creating a green cloud. Oh, I remember what I was going to say. So you notice that these levels get created with the Ichimoku cloud. These kind of flat, that's resistance. These flat, that's that's important. Same kind of here. We're developing this flat kind of table aspect. We expect to find price action around these levels when the trend turns back up. You can also notice that each cloud, boom, 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 that each cloud is getting smaller and smaller. This is currently the cloud that we're in now. And when we add the reversal pattern on here, we notice that out here, what we're looking for is a smaller cloud, or we want to see the red cloud disappear and the next cloud, to turn green, especially as we start moving up. Um, boom. Another nice graphic that I like is called the Gaussian channel. Um, you see when we're above the green, it's good. When we're below the green, it's red. And so fundamentally, we want to get up into the red channel. We want to get through it. We want the red channel to turn green and the trend will change. You can see this is kind of delayed, right? You actually kind of knew right here when, this is where you wanted to short, right here as we break through the green line, come up and test it. We can expect resistance. We actually rejected from the median line and fell out of the channel. Again, we've gone up to the median channel and rejected, fallen out of the channel, come up to the median line a third time and fallen out of the channel. Each time we do so, as this band tightens, it becomes more likely that we will eventually break through. And then, of course, as the trend picks up and gains speed and momentum, generally the band widens, and as price action tightens, um, the band gets smaller. So we will check the Gaussian channel each month. I usually don't look much about volume, but there is no, like, it's no surprise that during a bull run you get increase in volume. During a bear market, when money or liquidity is getting removed from the market, going into fiat, volume in crypto goes down. But we will, once we see green bars again, um, we'll we'll be able to get really excited. Um, and of course, now what we want to do is we want to go to split view here. We're going to check out Ethereum, US dollar. Almost there. There we go. All right, 3 day. So what do we notice when we compare the bank token relative to Ethereum and then the Ethereum price to the US dollar? We notice some interesting things. Um, Bam. We notice there's this triangle pattern, right? We can test against. We need 3 points to test a triangle. If this next point goes above the triangle, we start looking at some type of channel or wedge. Um, Also, if it stays, kind of below the horizontal support, again, we can look at wedges, but it's basically a triangle. um, we notice when the bank, when Ethereum runs up, bank price goes down. Now, you could also say that's odd. Well, when Ethereum goes down, bank goes down as well, but you would expect in a bear market when Ethereum goes down for your token to go down, especially a low cap altcoin, because people are moving their profits out of the bank token into Ethereum and then out of Ethereum into US dollar, and then they are till they aren't. And what we start to see is Ethereum going sideways from September to October, and the bank token getting a little price action from that sideways movement. And then we see Ethereum recently over the last couple of weeks, and Bitcoin has been moving quickly up to the upside and causing volatility, but ultimately people are still selling low cap cryptos into Ethereum so that they can take profits in fiat USD out of Ethereum, move some of those profits back into low cap coins. So ETH goes up, bank goes down till it doesn't. We can expect another 10 to 20% move as we're looking for this um, lower high realistically or higher high. What we notice is that we have some important moving averages coming in, and they're going down, right? So we're just looking for sideways movement so that the downtrend begins to flatten, and we want to eventually identify some point in the future where we can say we're on an uptrend. But there's a lots to go. But as ETH, one of the things that you notice is ETH and Bitcoin go sideways. This provides opportunities for cryptos to go up and bounce. Now, we're still looking, if bank bounces, we're still looking for a lower high, right? We expect to find resistance at this 100,000, I don't even know what this is, but at this line, at this price, um, at 1 penny, whatever. But essentially, at this price, we expect a bounce back down. We want to see we expect a lower high, and then we want to find a lower low. Here we go back to this head and shoulders, um, right? We expect to come down. We, essentially we come down, up, lower high, and then we can start looking to break the previous highs. And so this could very well happen that as Ethereum moves sideways, again, if it stays within this triangle, then we can expect the bank token to put in some type of reversal pattern, not necessarily a head and shoulders, but definitely some type of pattern that leads into at least a bounce to a lower high over the next 3 to 5 months, right? Again, these are just general patterns, and deviation from these general patterns can tell you a lot more specifics on smaller time frames. This is just a kind of monthly report, and we're, really taking the information today, this month, looking back over the last, since this reversal pattern started, looking over since the last 5 months worth of data, and in particularly the last couple months of data to start looking for trend reversals over the next coming, 4 or 5 months. If we go back to our bank token and we look at the 3-week chart, what we expect to see is some type of bottoming pattern where we start getting some green candles. We won't notice the pattern except for probably on the daily or 3-day time frame, when you start getting below the daily time frame, start ending up with lots of gaps in price action. So below the daily, or once I get to the daily, I start going to the line chart, and just simply we want to see higher lows, higher highs. We want to see these green pivot points. We want to see these red pivot points change to green. And that's what we'll look at. And you'll know when it happens here on Bankless Markets.